Crypto update for you guys. Hi, it's the Crypto Sniper. Before I forget, September the 4th at 1930, that's British summertime, 1930 BST time, September 4. We're doing an interesting free webinar. We're going to be both the concept of it's not what you make, it's what you keep, but I'm also going to be introducing a new element into this webinar. It's free. You need to register by going to themarketsniper.com. I'm going to be talking about the 5 M's, the 5 key M's as well, to take you forward to your trading, lifestyle trading success, which means trading in a manner that does not see you 14 hours a day reacting to the market. So that'll be an interesting one, and that will be this September the 4th. Let's have a look at BTC USD. So here we go. This is the Bitstamp exchange. I've got a very busy chart on Bitfinex, so I want a slightly simpler take so that you aren't overawed with key levels of significance that only HVF traders that have been going through every element of this market's move would understand. It also crowds the chart out. Even this looks busy on the smaller time frame over here, as you might see. So what do we have? What do we have? Well, let's remember from whence we came. We had a blow off top, essentially from... we started to get exceedingly parabolic around here, around November. That's not to say we hadn't done real well from September up to the November. I mean, you could have bought here at 3,000. We were lucky enough to sell a head and shoulder and buy at just sub 3,000. It traded just sub 3,000, and I got a fill there. I remember that, and I remember that run up. It was a very, very fortunate and lucky run up. It literally made it to the T, and that was essentially a more than doubler, because you got a 2.9. It topped at 7.9, then it started to show some signs of whoopee, got a bit frothy, and then it dipped down, and then we had the real parabolic run, 5 5s, roughly 5 5s, and that was accumulation of BTC. And it just went right the way to 20 grand in an exceedingly short time frame, and then very closely to returning almost entirely, even at this juncture. So that was a nasty little roller coaster ride. And the thing with volatility is it kills retail traders. Why? Because they pump and they leverage up and they increase sizing and increase confidence as they're making more money. So they go from 1 unit to 3 units, to 5 units, to 7 units, and they keep getting positive affirmation for bad behavior, loss of money management control. So you inverted pyramiding in this, and you are making even more money, and the more size you're adding, you keep getting even more rewarded for that ever greater size in this mooning period. So you then have people topping out that have seen more money than they've probably had in a while, some in their life at this point, and then you get the shakeout. Most are busted literally in the first 10-15%. Why? Because they've been cost average pricing their way into the melt up, and they've got more assertive and more confident and reach for the mortgage money later on, as they keep saying, check how right I am, check how right I am. This is going to the moon, next stop 100,000, Q McAfee quotes, million, etc., etc. I'm going to be bold. There's an old saying, in the world you have bold traders and old traders in the market, and a lot of people got real bold and then faced to make old age dim as a result of that. Anyway, down we came, and eventually we started to get a little bit short. I did an interesting chart, by the way. Should dig this one out. Why don't I show it in the sniper circle? So this is our premium view. I annotated this chart for the guys. Let's show it to everybody here. We do quite a bit of work on volume by price, just to illustrate and get people to understand. This is roughly from this period. Volume by price shows how much actually changed hands at the different price point levels. So it's a very useful tool. Go read up, start utilizing it, but you need to know where to draw it and how for it to be significant. And I'm going to illustrate one example right here. So the massive amount of volume by price. Now what I've actually done is I've fiddled with the levels, and I can tell you that not in this chart, but in another one that I did subsequently, that up up to 12,000 was 83% of all volume from this point of going parabolic here. So we have this green Dunkirk level that I've highlighted, which literally is the point that we went parabolic, the 5.5s, that is kind of held up to the lows of the 5.7s so far. And you had this massive melt up journey. Now, if you work from the 12K level down, guys, the 12K level down, 83%. So that 5.5 to the $11,999, that was 83% of all volume that traded. In other words, everything from 12,000, see that blue line that I've essentially drawn, everything here and above was 17% of the total trade of this period. That includes obviously this bear market, by the way. So you wouldn't have seen that level of skewedness when you were going up. This would have been a lot smaller here as well. But what's happened is you've gone really, really high. Very thin volume is trading at this 19,900 level. Very thin volume over here, very thin volume, and then down, 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 and you started stacking the volume by price, these horizontal histograms in these levels. So this tells us that this price action has been leaning on the floor. My Dunkirk levels, which depending on which country you're in, it's quite a common profitability level. Yes, there's certain parts of the world that have got a much lower level, and there are parts of the world that are much higher, but it does lead to a certain centralization of mining into certain geographic zones where the costs are low, because we've been leaning on this aggregated level of mining profitability for many people. Bounce, lots come back, bounce, lower bounces, bounce, bounce, bounce. And then we had this rising wedge. Now, the interesting part to this, if I take you back out of the sniper circle, is that rising wedges can actually see a melt up out the top. And even more interestingly, if we drop it right down now, I'm going to take you to the hourly, and you're going to see this rising wedge. We actually had HVF structure in here. So you were squeezing in a wedge, but that shows buying coming in under here. So let's actually go back to the other browser where I can do some scribbling for you, and take it down to the hour. It showed buying coming in under on the rising wedge. So that means there's drift support coming in. However, that's a dangerous and also possibly an optimistic thing. It can be either. When that happens. So what's actually happening is there is buying support coming in. So if I change that to a nice green for buying, you can see the buyers coming in here. They're drifting up, buying there, buying there. We were already in a form of squeeze. So that's that dotted line I've drawn there. And we call these a grind line. Now this sets up risk. What did you get? You popped out the top and we got a bit volatile here. So this whole area here got a bit choppy and started to spoil this rising wedge. This is high vol as in volatility, not volume. So you got to pop out the top and then you slammed it back down. However, once again, the buyers came and just about held that line. So make that green again. And there they came. Now what you'll see then effectively is that we modeled, and you'll learn how we do this if you do a program. There will be an offer on that webinar, by the way, for those that are ready. It is not for everybody. That's that September the 4th webinar I've mentioned. So you can see all these patterns that are coming down. You popped out the top of the wedge, but this space still continued to hold with this buying, and we squeezed. So we then said, okay, you're wanting to tell us something. You're giving us a little bit of an irregular shaped high one. There's a relative low one there for us on that point there, a relative high 2 and a relative low 2, and you actually squeezed, and that was our 3 high and 3 low. Believe it or not, yes, there's a squeeze within a squeeze. That's a primer. We'll teach you about that as well, and the massive gift that gives you. And you got your break. We then got, on a smaller time frame, a fractal in there. So I will take you in that on your second interim level. Boom, like that. second interim. That's exactly what happens. Wind up again, an ascending pattern. That means that bottom was quite rising and the top was more flat, and that pushed us through the key level of significance, 7k. That's what happened. So that's where we are. Overall target for this structure of this pattern, 7,343. But, and there's always a but, isn't there? So let's refresh that chart. I'm going to drill down now into, that was the 2 hourly that we were sat in. I'm going to give you a little bit of a bird's eye view in this. And this understanding Bitcoin is one of the key components to understanding the market, because Bitcoin gave permission for all these alts everyone's getting excited about to go back up again. If Bitcoin smashed down out of the wedge, it would be far more difficult for all the other alts to have had the recovery pushes that they have had. So you need to bear that in mind. And there's a little bit of a warning in all of this. So we'll take that. We're going to stick him in this browser again. So why am I doing this and putting you through this? So that we can draw. So the Edge browser, which works with the Surface, allows me to annotate this better for you. So if you're wondering what's all the horsing around, it's hopefully so that I can be of higher value. So there was that wedge that eventually ended and was left. It was quite nicely showing before all the other lines came. Let's pull again through and pull this down. Get a bit more of the current action in. Now I'm actually, that's back on the 2 hourly, so that's why I thought it was a bit small again. Let's drop it down, reload. Let's drop it down. Yes, leave, do whatever you need to do. So there's a little bit of a warning right now, though, for people. Just because we're showing you something that potentially is bullish doesn't mean it's a storm in now. We've been covering this with our premium guys, and we've done this draw a lot earlier, and we were discussing it a lot earlier and talking about this little wind up a lot earlier. But the cautionary I have now that we've pushed over the 7,000 is you've actually got a mini head and shoulders now looking at you. So for those that think, okay, rush in and buy, it's a bull, he's called a bull, he might be right, let me charge, trade to 7.3. Well, the real lesson in here is that we've squeezed real tight. I think I'm going to drop one more time frame. Let's get a little bit greedy. We squeezed real tight. Let's just get into the detail of where we are now and get a little bit of a better micro view and scale this. We've squeezed real tight. It's pressed up. It's run the second interim on a small little wind up. You can see it. It almost runs perfectly through that second interim. That's that thin lilac line, and that's all happened after you've got your primer. So let's just show that as well. So note that squeeze there in those two lines. This gives you very high. That was your fake break, your feign, your break and feign, and it came back in. It didn't run that stop level there. Then it bounced back out, and then you got your proper. If now I don't have volume on there, it's a pity, I'll have to go back to put that in, but that was where your volume came in, and then there again where your volume came in under here, which confirms your break. And then here is your steeply ascending setup that gave you a target perfectly confluenced with a 7k level. What have you got since then? Largely you've got a key level of significance of 7k serving as a possible neckline for a micro head and shoulders. So a little bit of tiredness. So this isn't a runaway state of play. So those that say, you know, oh, you're going all heavy bull, it's not a runaway state of play. I was also talking to my guys on premium about, we're in the final week of August and people have been away and have taken defensive positions. If you look at the charts for what went on during August, it's a pretty dull month. August started, just, you can see this is the 3rd. We started down. Let's do that actually in dark red, because it is just a bleed out. Dark red. August, all just losses. Then this is mid-August, the height of the holidays, and we're now coming to the end of August. So August is a down month, and it's just starting to get perky now. And that first inverted was way up top here in the top left. It was higher up. It was the beginning of the sell-off from that first inverted. So, August, a lot of people, I suspect, took defensive positions who are going to need a bit of money for their holidays. The retail everyday trader that's going away for a bit, didn't want to be sitting on crypto and worrying about whether he's losing money. Took some of the money to go spend on the jet ski and the kids and the plane tickets, etc. So we might start to get a little bit of the risk money coming back in. But before that, what may happen is that you have a short period of reversal after getting above the 7K level. The 7K level, once again, we've been in and out of it for a while. We wound up over here to get above it. If you were to get a head and shoulder there, that would be your target level. That would probably run you down there. But bear in mind, these things can overperform. Could bring you right back to the funnel zone, which is down here in terms of our draw. It's an upside funnel, so I'll paint it in green across there from 6729, as you can see, nicely illustrated. Now that doesn't mean I'm saying it will come down here. I'm just saying the scope is there and it can still be bullish because we've performed well so far on this. We do still have that 7343 target, which is a good one. I'm coloring it in yellow there, mainly because it's some way off. It's some way off. It'll represent a good journey. Will it come down to 6729? Don't know. Could it make this target? This looks in and around the 6850s level. So if I'm drawing where roughly is that bear, 6850 looks the level. You can see 40 there, and I did a very, very rough sketchy draw. It might be 60. You can do that for yourself. So possibility for a revisit down before pushing higher for there would be my bias, my overall bias. But there is one concern I have, and that's Main Street. So in some ways it's quite bullish that Bitcoin at a defensive period during August did not run the lows. So going back to the bigger chart, during a tough time, this kind of was your hard technical stop area. People said, okay, we're taking defensive positions, we're going away, and that level held. And as we got into the second half of the month, we started coming up under it with these buying arrows that I'm giving you. So it's possible that there's money that's going to get ready to speculate. People have two periods in their year that they think about their financial. Over December, they think hard, they brood, usually the men, but women as well. They'll brood about how they're not making time. They have time and holiday to think how they want to go forward, and they want this toy and that toy and to build the wealth. So they take action early January on a lot of things. It can be diet, goals, and also financial. So that period, the Christmas period, and then after their August holidays, which is September, we see the effects of that. So this manifests typically January. All those diet decisions, the realignment with goals, and September. So that means people acknowledge taking risks to make gains. So that's why we often have Santa rallies and a good first quarter in the stock market. Christmas bonuses are earned and all of that. And then September, you often can have a good period, but it also has the sharky, if we draw a shark fin there, the sharky period is also September, October, November, if things are too puffy. So there's also the scope of a bloodletting. So when I say Main Street, we're looking at companies that are heavily over leveraged. Some of them can't even pay the interest and are borrowing to pay the interest on their debt. If Main Street does a collapse, aka Wall Street, the non-crypto realm, then you'll have a lot of people running for cash. And some of those people also have crypto because they risk people. They're in the equity markets, they're in this. So actually an equity market crash, I do not assess to be positive for BTC. I do not assess an economic downturn to be positive for BTC because there's a lot of risk money in BTC and everybody will de-risk to get cash in bank and to feel safe and rather not lose. So people are actually risk averse and their Pavlovian responses will actually be to buy dollars in and have them in their bank accounts, even though the banks are probably bust and there's better places for it. The point will be People will sell their BTC, they'll sell their equities, they'll sell when things are crashing, and they'll all panic out, just like we were looking at the Bitcoin chart. So these are principles and concepts that exist, and we have to know and be aware of them. So Main Street is a risk here for Bitcoin, and that could be the thing if we do spill down below those big time frame charts that I was showing you here when we were on the daily. That could be the one risk, the one aspect that I'm saying be careful of falling out. And that's why I did draw that as a rising wedge, and I wasn't super confident to chase in bull, because that could have been a spill down. If we come into that September and October period, you could find yourself in a situation where you go, the other market is now spilling and it isn't helping us, and the bear market extends. Just when you think it can't go on any longer, you get proven wrong. And bottom calling is a fatal exercise. So a little bit of a cautionary note for everybody out there in terms of the risk. It's quite, they are real. But assessing that we don't have the great reset correction on the stock markets and the economy this September, October. Remember, I've also done on my Reset Sniper channel, and you should be following this channel if you like this kind of content, the Reset Sniper. The fact that recessions usually start within 34 months on average, from the first interest rate hike. In October of this year, we crossed that line. That means you get sell-offs in, you get reductions in growth, sell-off in companies. We know these companies are more leveraged than they were in 08. They've borrowed stock, they've borrowed money to buy their own stock, etc., etc. So if we come back to that macro view, the one item that threatens the economics of that, and I've got to do it in green because I've always called it the green zone, and the Dunkirk level, so I'm going to stick with that. The thing that threatens this area a bit is that eventuality, because it'll run everybody out of the market in a very, very nasty way. And that is certainly a set of circumstances where I could see further downside. So assuming we don't, assuming Wall Street and Main Street, which is the economy, the jobs and everything, doesn't dip any lower. So Wall Street holds, and the economy holds, which is your Main Street economy, for now, with all that's going on, because at some point it is going to fail, I'm afraid to say. I would prefer it's maybe not now. I'd like to have another bull market in crypto before that happens, but you don't get to decide that, I'm afraid. And you know, don't trade your belief systems about markets. Look at what they do, and if they start to fall, understand we will go lower. People will panic out. So assuming those hold, then I'm mildly bullish. Then if that holds, then mild bull for now on BTC, which will also then see BTC dominance shrink. BTC dominance will shrink. In other words, the alts will also recover and will do so faster. BTC dominance will shrink. In other words, it'll do that. Alts will go up quicker. So that's the time for your favorite alts as we get more into this. So BTC dominance increasing is usually a sign of concern. We did have it the second half of last year because we had the fork with Bitcoin Cash, and the alts had a massive first year, but it was the precursor to the bear market. In other words, the alt started fading, Bitcoin started leading the run in the second half of the year, and that led to the bear. So the alts are kind of like the penny stocks. They start failing earlier, particularly the smaller ones, but even the large majors started failing, and then Bitcoin is the final one. So people go into the risk, deep into crypto land, they start coming back out. If Bitcoin dominance is increasing, you've got to watch. It's either a bear market or it's coming to a blow-off bear market. If we're getting the alts that are being stronger, my take is you're in a bull market and BTC dominance will slip. But you don't want it to slip too radically, because that then starts to, you get all the flippening talk as well. So that brings confusion, and there's not enough liquidity in the others. Okay, so that's my take of how we are set going into September, how I view it, the risks for the green zone over here, our green zone, the Dunkirk levels, as I've jokingly referred to them, which is roughly 5.7s to 6.3s. So if you want a number for that, 5.5 to 6.3K, which was the beginning of the parabolic move that has given us that. I showed you by volume, by price, that the floor is being knocked on. We've been more looking for the trapdoor than we have been searching for the stars. So you've got to bear that in mind as well. I'm just slightly concerned about these elements. But if those don't occur to any dramatic rate, you'll first get this. At any point these start wavering, Wall Street, Main Street, the economy, all of that stuff, then you've got to flip real quick to bear, in my view, back to bear. Yes, I know you don't want to see his face. Let's draw a little bear for you. I don't know about my artistry. He's a fat bear. He'll be a fat bear. He'll just sit there like Jabba the Hutt. Okay? All right, guys. Good catching up with you. Remember the webinar. It's going to be insightful. You can become, in the hardship when others are losing money, you can be one of the few making money. And there's actually a small difference. It's one of the hardest things to do, but it's a small tweak. You have to learn method. You have to have the confidence to submit to process. You can't be responding emotionally. Once you stick and you make your decisions based on method, you end up luckier. That doesn't mean trading becomes easy. In times it will feel easy, but you feel more lucky more often, and it feels less hard. And it's like that tweak. It's like that first time you're riding behind a pro cyclist, and instead of slowing down and taking the inside line on a mountain bike hill descent, you keep your pace up and you follow him in his track, and he goes around the outside line, and you come out that bend 3 times quicker, even though you went a little further. And you realize, crapola, I've taken 30 seconds off my time. You suddenly have that gain. It's like holding the cricket bat so awkwardly, and it feels, and then the ball comes out the middle of the bat for the first time, and you go, blimey, that makes a massive of a difference to what I was doing before. I've just like upped my game, and it's just sprinted off to the boundary. Those awkward changes that you do, that are design changes that take you out of your comfort zone, and then suddenly you get them powerfully endorsed, and you think, I've just quantum leapt there. They are possible. That doesn't mean they're easy to make, but you can do them. Okay, hope you enjoyed this. I'm done. In trade safe, trade small during this period, and wait to see the direction that September gives us. Keep an eye. That's the other very valuable fact about what we do. We watch the Forex, the equities, and everything else. We're the reset sniper. We're the market sniper. All the other markets I discussed through the market sniper. We actually been trading some equities as well to keep fresh, and in some sense it has had more direction than the crypto markets during this period. You get to see the overall machine and where the liquidity is flowing out of and into. And that gives you a higher understanding. You need to be an eagle in the sky where you can see the lay of the land, the mountains, the deserts, the forest, the water, and the hills, so that you can position yourself in the strongest possible way. Okay, that's me done. Enjoy your day.